All right. Good morning, everybody. So it's really quiet this morning when it comes to what we have in store or on deck. Tomorrow we're going to have a lot more coming out of Europe, but for today it's really there's just not a lot there to deal with. So I don't on one hand, a quiet morning, we don't have anything to really, you know, focus on, but on the other hand, we don't have a catalyst that can keep this thing moving. So let's kind of just take a look at what's going on around the world. Got US dollar China here, and their markets are closed, but they attempted an inside day breakout and failed, just still sitting in this topping pattern. Really nice move last week off of this low, but all this buying pressure across the top, it's something that we have to get through. We have to get past. And US dollar Japan, after hitting that 141, we just haven't been able to get going again. Inside day, they had an inside day breakout to the downside, but managed to pull it back in again. Got that graveyard doji right now. So this is still in a precarious spot. It's sitting way too high. We need this to kind of back off a little bit. And if you go through finance juice, they were actually calling for this to break above 141. That would be a significant rally from its current location. And then there was some state ordered bank news. So they ordered their state banks to lower their deposits, and so we could see a little bit of shenanigans coming out of China, and that would affect Japan and kind of like a snowball rolling down a hill. All right, Europe's still open. It's 12:38 London. So inside day breakout, and they've still got it, but they've got a lot of economic uh, stuff on the table for tomorrow. And it wouldn't surprise me if they do end up just running doji today in kind of a hurry up and wait thing for tomorrow. And we still got the dollar messing around in that 103 to 105 zone. It's a really nice topping pattern after this run up. Nice leg up off of the lows. But I don't think we're going to get above that 105 without some catalyst to push us up there. So we had an inside day breakout, managed to recover it. And right now it looks like it's wanting to take a run to the higher end of yesterday. We'll see if we get a breakout to the upside. See all that pressure up here, all these wicks here. Every time we got above that 104 and a quarter, they were just waiting, selling on it. All right, so as you can see, we got nothing. All right, we got an auction at 11 o'clock, and that's it. even this Ivy PMI, it's from Canada. So, I'm not going to say it doesn't have any weight, but it's not even a US report. Volume's a little heavier than yesterday. It's where it should be. And we have an MDP. We have not hit that daily pivot yet. Yet is kind of the key word. All things considered, this is a pretty narrow range for the Globex. But we are going to be looking for an expansion here outside of this range. Right now, the threat is for an inside day breakout, so getting below yesterday's low. If we do manage to do that, we want to focus on Friday's cash open and then Friday's RTH low. We get past those, then we'll focus on the low of Friday, which is all the way down at 42.28. To even get there, there's a lot of things in our way, right? We've got our own Globex low. We've got the weekly pivot point. And then we've got some voodoo lines, 42.68, 42.44. So those two alone, especially that 42.68, it's a significant level, right? You can see back here when we got tangled up with it, it really struggled to get past that zone. It'll be the same thing now on the other direction, right? Old resistance is new support. All right, 10-day, 30-minute volume profile. We've continued to build up here at this level. And the same statement that we had yesterday is still true today. If we break that low, there's really nothing here to help us out, and we could fall down through this zone really fast. Now, yesterday when I made that comment, we had this low here. And the expectation was, well, if we break that low, then we're very likely going to fall through this zone really fast. And instead, it got saved. They came in and bid that thing up when we broke that low. Right, you can see these two long wicks here. So when we broke this low, it was defended strongly. And that defense didn't stick either, and we ended up coming down. But now we've got a new low to focus on. And it's the same concept as yesterday, that if we break this low, there's really nothing down here to hold it up or to help it out. And we should move through that zone as quickly to the downside as we did coming up through it to the upside. Faster even, right? Because there's the old phrase of taking the escalator on the way up, but taking the stairs on the, what is it, jumping out the window on the way down? Something like that. Price moves quicker to the downside than it does to the upside. So we would have this expectation that we would come back through that zone quickly and get back down to the 42.12, 42.20 area. We're still holding above that 50% mark too that we had laid out. That was Friday's measurement. And then 50% of the entire week, we have that level as well. And as long as we're still holding above either of these 250s, then the overall broader market is not in bearish mode. All right, we have a VPOC from yesterday. So if we do manage to break through our own Globex high today and make a run up, we're going to have to get through this. $42.90 and 3/4. All things considered, that's a pretty narrow IB. And today, there's not a lot of expectation for anything more than chop. So if we can get a catalyst that could galvanize this market in one direction or another, then okay, maybe something can change. But from where we're sitting at the moment, it's just this tangled up mess. All right, we're still 2% above the 10-week. So we managed to move back towards it a little bit, and it also managed to come up a little closer to us. And we're just a little beyond 1% above the 10-day. So these are not extreme levels. This is not signaling that we're due or owed a pullback, but it is kind of completing that wave, right? It's this kind of a general curve. So we topped out, we've been kind of rolling over. It would make sense that we're going to complete the curve. It doesn't have to go all the way back to the 10, right? It can just kind of pull back towards it, give itself a little bit of a reset, and then continue on in that move. When we look at the range for the week, you can see that we've really done nothing. We've gone nowhere, and we are really no better off than we were Friday at the close. That's better. All right, so we're just holding at the VWAP. All right, both the NASDAQ and the S&P. We've got a pretty fair, pretty decent balanced on each side of the VWAP. It's a little more extended on the downside, but so I've been trying to find a way to kind of talk about this. It's like one of those old spinning top toys, right? And you get a balance on the top side, a balance on the bottom side, and we just got price bebopping back and forth above and below VWAP until finally it starts to get out of control, creates a little bit of a megaphone pattern, and then breaks and expands. So until we get the expansion and the break, you can sell into strength, buy into weakness, trade the reversals, trade the range, or just kick back and wait for it to break. We know it will break eventually. We call it reciprocation, right? Talk about it before. You get, say, a 0.5% to the upside, then you're going to get that 0.5% to the downside. And it doesn't owe you that. So if it does stall out and fails to complete the crossover, it doesn't necessarily mean that you're going to expand and continue to move on the side that failed. All right, with the 10-year, we did get an inside day breakout already this morning to the downside, but we are not seeing the same level of commitment in TLT in the bonds. We swap over to the 30-year, the ZB. We attempted an inside day breakout, but we've come back inside it again. So we want to see some parity here, some equal weight. Even the ZN, while it managed to get that inside day breakout, wasn't able to keep it, and we're already back inside again. So we do want to see the 10-year calm down, that 3.68 kind of a line in the sand. We really want to get back below that level and keep it. So that's a good start. It's a really good start, but it's not enough. We want to see this continue to fade off, and we really do want to see that those bonds are now defended and that it's going to stick. So we still got 129 on deck in focus. We got to get back up there at least, right? And then we got to keep it. To get there though, we got two major voodoo lines, 128.16 and then 129.01. And a couple of minor ones. Yeah, they're not likely to do much to get in our way. All right, so strong save on Friday. No real follow through yet. Yesterday, we got to get above that, right? That's what we're really focused on. All right, net gas is down, energy's down, all kinds of energy, oil services, energy. And then we've got the KWEB China constituents are down. That'd be your BABA, Baidu, JD, PDD, or PPD. The rest of these don't really have enough of a move yet that we'd want to focus on it, right? 0.5% is a pretty solid benchmark to use. So all these that are just slightly up or slightly down, don't even take those into account yet. Metals and mining are up, and real estate. A little bit of transportation, solar. Oh, never mind. Solar's not up enough. So yeah, I mean, think about what we've got: transportation, real estate, metals and mining, and financials. So we got KBE up this morning. No, we don't. That didn't print today, right? That was just must be some carryover from yesterday. Gotta watch Thinkorswim. Yeah, there's not enough there. better check metals and mining because that one's a little bit of a shocker to see that one up. No print on that one either. All right, so we got a couple of marks here on XLI, but not enough flow to actually give it any credibility. Let's try this another way. Since we're not really getting much out of those, we'll use TradingView, kind of run the scanner asking the question, how many names this morning are up in the S&P at least a 0.5%? And that answer is 5. So we're not bullish if we're looking at how many names are up. So we'll try it the other way. How many names are down? 5. For the NASDAQ, 5. I'm not liking that. Let's try that another way. All right, how many names are down in the NASDAQ this morning? At least a 0.5%, 15. So on one side of it, we don't have any breadth, right? We got nothing out there. Everything's just collectively waiting. On these names that are down, we've got more semiconductors, it seems, than anything else in the list. I do like these heat maps, man. They really kind of clarify things for us. So this is what we got, and you can see the fangs. Meta, AMD, and Amazon are your green fangs. Remember, AMD got added to the NY Fang list. So did Snow. So, it's a little weird to consider AMD a Fang name, but there you go. But a lot of these are just flat, right? Google 13% or 0.13%. Tesla, not even 0.1% this morning. We do have those China names down, PDD and JD, 1.5% and 1%. So, we do have some movers. But NVIDIA stalled, Apple stalled. We're just not really a whole lot here to get excited about yet. All right, so this is the S&P 500. I just used the filter to get it closer to 100 names. Took the highest market cap. We want 100. I got 105. It's close enough. Then I used the filter to adjust how quickly we leave this gray and start actually seeing a red or a green. And, you know, it really just, even with that adjustment that I made, all this gray area just kind of highlights how little we got, right? We got nothing. Well, so someone just made a comment that it's penny stock week and that those there's some penny stocks moving. It started last week with IWM and a way to say it. It's not a dash for trash, right? I don't want to use that kind of phrase because it wasn't that. It's more of this rotation out of the mega cap market, out of that big mega tech market, and finally starting to rotate into other things, right? Including the very much underperforming IWM. So is really just kind of a continuation on that, which is a good thing, right? We haven't had the breadth from, by now I'm sure everybody's kind of read the stories or at least seen the headlines, how 5 names have carried the market this year, 7 names have carried the market this year. And if those 5 or 7 names are going to put down the water bucket and let somebody else do some work, then, you know, it would stand to reason that names in the IWM are going to be on that list. So here, for an example, we've got consumer discretionary against consumer staples. And you always want to look at the name that's first. So XLY is outperforming XLP. When this is heading to the upside, XLY is doing good. And when it's going to the downside, XLP is doing good. And we got the S&P up here. And this is on a weekly, but we can swap it over to a daily. Should have put more time on than that. So we'd like to believe that staples are going to underperform in a risk-on situation, right? That people would, if they are feeling risky, where they would rather trade Tesla than a cereal, right? General Mills or Smuckers. There we go. Growth versus value. So we can see that runaway on those growth names and how it's finally started to maybe pause in that finally. It hasn't rolled over and it's not headed to the downside yet, but it has paused. course, that was a weekly, but looking at it on a daily, we're still holding above the 2 major moving averages. So right now, it's still just a pause, growth dominating over value. But if we do start to see that rotation pick up more, then it stands to reason we're going to see more of those names in, say, IWM and those cheaper names, not necessarily penny stocks per se, but they're going to get a little bit of love on there anyways, just as a byproduct. The positive momentum is fading a little bit, though. We're still in a primary trend and a secondary trend with growth over value. All right, so this is tech versus energy. We can kind of see how, during the whole bear market and energy was dominant, we were headed to the downside here. Everything changed in 2023. Tech exploded. We started making our way back up, had the crossover. So far, that hasn't changed. It's kind of stalled out a little bit, but we don't have a pullback or anything. So we need more, right? 1 week isn't enough. 2 weeks just kind of gets us started. All right, so this is Tesla, and we're looking at yesterday's candle. We're down a little bit this morning. This is setting up to be a really nice reversal. It would be great on the weekly for like an evening star reversal, but it's so early that we can't even use that, right? That has no value to us yet at all. The only thing we could be looking for here on the weekly is a gap close, because we don't have it yet. Now, some analysts will do a gap close as soon as we're anywhere inside of this candle, right? They'll consider that gap closed. I don't do it that way. It doesn't mean that I'm right and they're wrong. It's just a different approach, right? To me, if we closed here and we opened way up here, well, then that gap ain't closed until we come back down here. That's just the way that I do it, right? So it doesn't matter which way you want to do it. The main thing is to be consistent in how you choose to do it. Don't decide one day that it's a gap close just because we came in the candle, and then another time decide, well, it's not a gap close until we get back to the close again. So Tesla does have that weekly gap. It's a gap up. So it is, to me, more bearish than a gap down. I want to see this gap closed, and then we'll talk. And it doesn't have to close that gap right away, right? We can still see a gap down here that hasn't been filled yet. And I'm sure there's others, right? We just keep scrolling our way down. So one at a time. I want to see this gap closed, and then we could talk about how bearish or bullish. Taking it back to the daily, we are down just slightly this morning, a negligible amount. If we continue to see a fade in here, then that would be the first thing we need to break. We need to get to that gap close and then start negotiating with Friday's price. So you could use 50% of Friday's candle, but it's not a really big candle, and I don't think you would really benefit from that very much. right? Now, if you wanted a wider range, you could use where we closed on Thursday and then the high of Friday. That would give you a 212.40 basically, but I really don't see much value in that either, right? Other than the idea of we need to hold above that range if we're going to maintain this bullish posture. And it's a reasonably decent posture, right? Considering how far we've moved since the 26th. It's been, reasonably decent, right? We don't want a runaway freight train anyways. And we do have the 5-bar rule. So having a digestion day yesterday, a pause as it kind of just chewed on this level, yeah, that makes perfect sense. But watch for a springboard here, because yesterday could have just been that little bit of a pause before it continues to march to the upside. And if we backtrack a little bit, right, there's a 5-bar play, and then we had a little bit of digestion. It really pulled back, right, from like 92.5 to 78. Spent nearly a whole week just chewing sideways before this next advance. So it could be one day, it could be a whole week. And if it's going to stay bullish, well, then we want to see it hold at the very least above this gap. We'll call that 207.5 gap. If we get back inside of that or underneath that, I'd be a little concerned about any kind of bullish continuation. But I think it's just on pause. It needs to it really needs to work off some of that move so that it remains a healthy move and doesn't get overextended, right? We don't want it to get ahead of its skis. But that sure does look like a really nice evening star reversal. It's the start. It needs to follow through. All right, Microsoft, these last 2 days with these really small days, kind of a spinning top style candle and all this wick action across the top here. There's certainly some buyers or some sellers sitting up there, and they're just really having a hard time getting through that zone. We don't know that they're done yet, right? They could be holding on to a whole lot of stuff, and every time we get remotely close to that area, they're just selling it out, right? So until we know that they're done, seeing this get through that and continue to move higher, we'd have to see it. What's the phrase? It's got to prove it, right? And right now it hasn't proved anything. And then we are down a little bit this morning, but really not by much. We closed at 335.94, and looking at the bid and the ask, we've got 335s. Try to split these two, call it 335.70. So really not a whole lot. This gap is closed, I believe. $332.58, and the low of this candle, $332.55. Yep, so the gap is closed. We have an IX10 at this point, and it's a very narrow range. So when you have an IX10, you don't want it inside of a really big candle like this, because that really doesn't imply much compression, and there's just really no expectation that we're going to expand out of it in an explosive move. But when you get an IX10 and you're trapped inside of a very narrow set of candles, then you've got this greater expectation that when we come out of those candles, we're going to get much more of a move. So this was a really narrow range, and this one, say back here, I think would probably be a better example. really narrow range. Of course, we didn't get much of a follow through on that first group. But when you come out of a tight range like that, you usually have a really nice follow through. And that might not seem like much of a follow through because I was zoomed in. But now that I zoom out, you can see, that was a pretty good size move. So now we've got the same thing going on with these last 2 days. Comparing these 2 days to, say, these last 4 days, these are really small in comparison. So, I mean, they're still big days. They're just small relatively to these others. So with that in mind, if we get an expansion out of this to the upside, we could easily double. On the other hand, though, if we do break down below that 332.50, then getting to the bottom of that candle, 325, call it 326, would be a pretty easy thing to do. So that would be my target. If we do break back inside of June 1, then we'll just look to get to the open of June 1 first, 326.20. Yeah, 326. I like that number. All right, so Google's been putting in this topping pattern for a while, and every time we get above that 126, the sellers are just coming in pretty strong. I'd lower that down to and say anything above 125, and the sellers are coming in. The thing is, if we can work our way through there and finally get through it, this thing could easily expand up to 130. No problem, right? And in fact, we got a level up there, 131.82. That'd be my target. We just got to get going. And I do like where we closed, right? That 126.01, and we're up this morning, 126, not by much, right? But we are up. So especially the fact that we closed as high as we did, it didn't get sold off as deeply as it did the other times we got up there. I'd be looking for an inside day breakout here on Google. That'd be a good starting point, right? So we got to get above 127.43 for the breakout. And if we do, then we got a straight shot. I like it. There's nothing back here. Of course, I don't have very much time on it, right? We could add a little more time. There we go. Now we got some trash back here to deal with. So there is a gap close at that. The gap starts at 131.82, and then it ends at 133.29. That's still going to be a significant level that I'd focus on, and that'd be my target to the upside. All right, Meta's kind of down this morning. It really isn't getting much flows either. Most of these aren't getting much flows, but you can see those wicks across the top, right? Everything through that line in the sand. We got up there, it got sold it got sold, it got sold. But at some point, we're going to chew through all of that liquidity and we're going to get above it, or the market's going to say, screw this, I'm tired of fighting it, and it's just going to sell off again. One or the other. Well, we don't have to guess, right? We don't have to guess. We don't have to assume. We can just focus on getting above, say, yesterday's high or Friday's high, and look for that breakout and expansion to the upside. Simple, measured move. Even just taking yesterday would give us some targets to the upside, but I'd rather use this big day here. It's only a big day in relation to the days around it, right? But still, 50% of that is 278. And if you wanted 100% of that, then you're looking at 282. That's not bad. From 274 to 282. And trust me, it can easily make that move, right? This thing it's got legs. It can get up and move when it wants to. I know that we're supposed to be bearish, right? After all of this mega big market cap tech names just expanding and having been traveling so hard and so fast, and they're all overextended and they're overbought. And the thing is, it doesn't have to stop. And the more that people try to short it, and then those shorts get squeezed and they just keep getting their heads popped, it's just going to keep going up. So you kind of want to just set your levels, let it give you a reason to go in and jump in. We're talking short-term trades though, right? When it's not like we're saying it's time to load your portfolio up with this stuff. It certainly is at nosebleed levels, way, way higher, and valuations, I mean, forget about it, right? It's not about that at all. It's just going with the flow, not fighting what the market's doing. And until they break, key levels, then there's really no short to put on, because you're only shorting if you don't wait for it to break those levels. You're just shorting it because it feels like it's the time to short it, not because you have any signal to put a short on. All right, Nvidia is down this morning about $1.70. Try to put that into terms of percentage. Well, that's not much. $1.70 is about 0.5%. So not much, right? The thing is, that does put us just about into the middle of yesterday's candle. So talk about an indecision location. We're exactly in the middle of that candle from yesterday. So we would need to break out of that to the upside, and we still have all these levels to get through, or break out of that to the downside. That is a really nice setup though, if you think about it, especially for newer traders. All you got to do is let it choose which direction it wants to go and trade that. That's pretty simple. I could fire up my old bot that I built and it could trade that one. Oh, Alfred. So Thinkorswim has these programs that you can run that will buy and sell stock and futures. It won't do options, unfortunately, but it will do stock and it will do futures. You just have to point it towards the market with whatever commands you've already had preset. And if those conditions are met, it'll buy into that position and then it'll sell you back out of it too. It was really cool. I found out about those because the TD Ameritrade website has these companies that basically sell you one. And I thought, well, why buy it if you can just code it yourself? So yeah, that's pretty cool. Too bad it doesn't do options though. That'd be cool. All right, so Bitcoin's kind of still holding these lows. We did get an inside day breakout, but it managed to pull it back in again, and we're basically flat. We really want to see something out of Bitcoin, right? It's a little bit of a liquidity tell. I don't really want to approach it that way, but it does correlate at around 70% right now with the NASDAQ. So if this is holding the line, we got to have an expectation that the NASDAQ is going to hold the line. That'd be the cues. So, the fact that we're basically flat here puts us back into the same boat we were earlier, where we need something to happen, right? We need a break somewhere. Something's got to give. We know that in a risk-on market, we've got either finance or technology as the leader, and then consumer discretionary is usually like a backup player. Well, looking at financials, we got nothing here. There's these little dashes aren't a signal of strong flows, right? There's not a lot of volume piling into this thing. So nothing out of that. And XLK, same thing. Really not a whole lot of positioning here, and certainly not an expansion above or below. So it's just this collective breath holding, hurry up and wait. Since Friday, we got to get out of this range. For good or for bad, we got to get out of this. We got US dollar Japan making that move back up. There is a gap to close here, so we can focus on that. Bringing it out onto the daily. We got that 140 and then 140.5. If we continue to see this expand to the upside, we got to have every expectation that gold and silver is going to continue to fade off. And that is not what we're seeing. Look at that. A little bit. A tiny little red candle now isn't enough. All right, there's a little more of a reaction. So we got silver finally starting to break loose. The start of breaking loose. But silver's been more responsive than gold lately when it comes to this US dollar Japan situation anyway. So it's the start. Maybe it's an early warning. See a little more follow through with gold. At least it's something, right? Kind of focus on commodities, maybe step back away from, the hamster on the wheel of all of these sideways big tech names. Let them break the range, right? And until they do, until they finally get out of that zone, break the range, trade something that is moving, like oil, commodities, futures, or financials. And that way you get out of that rat race and give them suckers time to actually give you a trade opportunity. Other than that, that's what I got, guys. Be careful, be safe. Watch the news, but I don't really think there's much. It's going to be a surprise news that'll move us, right? Not something that we can see coming. And I'll see you.